Good afternoon, everyone, and welcome back. This is Daily Trading Analysis with a quick market update for today, September 7th, Thursday. Today is the day in which we got initial jobless claims for September, way lower than expected. We were expecting 234,000, and we got really low numbers for the initial jobless claims, which is really bearish because the labor market is still super strong and people is not claiming jobless, and this is not what Fed wants. Fed wants higher unemployment, higher claims, and less wage pressure. Regarding continuing jobless claims, we got the same way. We got way lower than expected. We were expecting 1715 and we got 1679. So the trend here is really going lower in both continuing jobless claims and initial jobless claims. Really bad for the markets. And basically what we did today, it's just continuing selling off. So basically for the Nasdaq, this is the 30-minute chart. We were waiting for this previous support that we got yesterday. We crossed, and I was waiting for a look below and fail, but basically we didn't get that. We started the day gapping lower, and if we check the lower time frames like 1 minute, well, before moving that, let's see that this was the big push, the thin structure, the volatility push that we got here. I was waiting for this price action around here, and this is basically in the range in which we are trading right now. The entire day we've been going in this range, chopping around, because we were consolidating in this range in the overnight, and then we lost the support that I was mentioning from yesterday. London Open, really critical, going lower, push up, going lower, and then the final push lower on the initial jobless claims. And after the open, the levels were quite clear. We got a nice level here, and then we got this really important level, yesterday's low. So basically we can see that we are trending higher, but look at this: high, low, high, low, high, low, high, low, high, low, bounce, low, low. I mean, today is one of the choppiest days that I remember since months ago. Today, it's not the day in which you want to overstay your welcome. Today, you want to take profits in this kind of push, not trade in the choppy range, because when Nasdaq wants to move, it's really pushing. So you don't have to trade the choppy. It's really difficult not to trade that because you always think that it's time to buy because it's going to go. But look at this clear, at least ascending support. There's a lot of buy-in. I've been checking cumulative delta on the Nasdaq and it's 7,000 positive. So there's a lot of market buy-in today. And despite the fact that on the daily, we are just putting this bottoming tail after the consolidation and look below. So we are waiting basically at this range to see if we continue lower tomorrow, Friday, or we start doing this kind of higher lows toward maybe a retest of 15,500. Who knows? But this week is really choppy, and if you are feeling the pain, we are all there. We are all trading this market. This is the weekly chart. The weekly right now minus 1.61. And let me tell you, tomorrow is really interesting because we got the support on the lower range of this 30-minute range. This 30-minute support, we have the opening print on the squeeze on the NVIDIA day at 15,000, basically almost flat, 15,075. So I will be watching that tomorrow. And also this kind of thing, it's also worth watching. Yesterday's low, it will be resistance today. We've been chopping around here, but if we reclaim this level for tomorrow, we might see a push into upside, or for the bears, just a rejection lower for testing the low of the week. So that's the forecast. But what is true is that today is really choppy. So manage your expectations, take your profits, because this is really, really difficult trading. Why is difficult trading? So look at the dollar. The dollar wants to go up, but it's just can't go up as expected. I was expecting way more push on the dollar and way more sell-off on the Nasdaq. But look at this, up, down, up, down, up, down, shopping, and now grinding higher. Come on, what is this? What is this? Yields are in the red, and you are supposed to think about yields and interest rates going lower and the dollar feeling some weakness. But this is the 2-year yield that is pushing towards higher interest rates, 5.1 perhaps, who knows, but this is really, really bad. The 10 years also pushing. Look at these higher lows, the failing here, and now we are almost there at 4.3%. So yields, markets are expecting higher interest rates, high yields. But there are some divergences, like for example, the treasuries are in the green. Look at this. Treasuries, despite the fact that are choppy, are in the green. Dollar is in the green, yields are in the red. So really mixed sentiment. I think people really don't know where the market is heading, because initial jobless claims is important, don't get me wrong, but perhaps strong labor market means soft landing, and what everyone is watching is next week CPI reading. Regarding the big tech, so as you can see, almost all in the red. The most critical one is Apple. Look at this huge sell-off. Yesterday, big day in the downside, now gapping lower, this gap, and trying to finish in the green, but 3.48 in the day. And this is due to the ban that China has put on iPhone mobiles devices. So really, really important decision from China that is for sure affecting Apple. Yesterday we also got a really bad day, now gapping down. It was almost 5%, and look at this daily. This daily is really affecting the Nasdaq. Microsoft minus 1.10%, also in the red. Tesla in the red. Amazon consumer discretionary putting a nice bounce of this beautiful support up here, and I think it might be worth watching for a move higher for 143 and August 2020 level. But it's certainly holding the Nasdaq, the same as Google. And look at Meta, because Meta today was a surprise. Look at this push higher on news, and then look at this move down. This was certainly a killer for a lot of people. Not the entire move, but just this range is minus 4.34%. So a lot of volatility today, a lot of manipulation, I think. And banks are still in the red. All banks are in the red. And the most critical thing, two things that I would like today to share with you. The first thing is that dollar is pushing higher at the same time that yields are going lower. That's a divergence. But something interesting, first I'm going to show you that right here. Look at these defensive sectors. XLU utilities 1.50%, staples 0.22, and defensive healthcare 0.52. Let's check that on the tool that I would like to have the details, because certainly we might be seeing a rotation to defensives in terms of Energy, look at this. Energy, it's up here at 2.69% on the 5-day performance. And then way lower, we have the rest of the pack. And on the rest of the pack, we have the defensives were down here. So the 5 days, we didn't see a rotation to defensive in the 5 days performance, but let's check the 2 days. Because on the 2 days, we are start seeing utilities 1.37% pushing higher. We have real estate, we have staples, energy, healthcare, and then technology 2.79. So perhaps right now we are start to see the initial move of the rotation for defensives. My recommendation is to just continue watching these sectors, because if we are seeing the rotation to defensives, the Nasdaq might see and the S&P might see way lower move potential. And we are approaching some support, but if tomorrow we have a strong day also continuing lower, gapping down, Apple and all that stuff, and we continue seeing energy going up and the rest of the three main defensive sectors in the green, for next week, we might see some sneaky price action pushing lower the markets. And I think that's the most critical thing for today. Choppy markets mean a lot of fight, a war between push and bulls and bears. But we are starting to see some divergences, for example, for the dollar with the yields. Dollar strong, yields going lower doesn't make sense. Treasuries in the green doesn't make sense either. We have gold and metals overall in the red also, but the Nasdaq is somehow trying to go higher. Defensives are pushing higher, so maybe the Nasdaq is in the wrong direction and we are going to see resolution starting tomorrow perhaps, and perhaps next week. We don't know, but we have to watch these sectors for details, for all these details that made you wonder, why are we seeing these kind of things? And this is why I make these videos, not for you to just see the price action, choppy day. Everyone can see that. But I want to go to other markets to see the reaction to the critical areas, the reaction to the fundamentals, and that's why I make these videos. So hopefully you find this useful, and I hope you had a good trading day. The trading week has been really difficult. Since last week push, we started consolidation, now moving lower, and not only moving lower, we've been seeing a lot of choppy price action, not clear momentum, and I think there's sneaky manipulation in the background, so be really careful. So that's all from my side. As always, thank you for your time. If you found this video useful, please remember to click the like button and subscribe to the channel, because I upload videos every single day for market forecast, market updates, and market recaps. Thank you for your support, new subscribers. I hope you are learning a lot of things. I'm really happy seeing these new people watching the videos, because I love teaching, I love trading, and I love finding new opportunities on this market. So if you want that, just follow me, subscribe to the channel, and let's see what happens tomorrow, Friday. Be really careful, and remember that discipline and risk management are key for success. Don't forget that. Stay safe, everyone, and see you tomorrow.